Farm4Profit podcast. Take a listen, have a blast. Farm4Profit podcast. Learn about farming while having a laugh. Farm4Profit podcast.
Dave, I love these episodes that come from the listener suggestions. And it's not just us saying that because our content is driven by the listener. And this was a topic about a potential insurance product that could maybe provide extra opportunity or protect some risk in the regards to flex leases. So I'm excited to bring these two guests into our virtual studio to learn a little bit more about what types of products are available and specifically what they have to offer today.
And that's why we asked for suggestions, Tanner. I mean, we're Farm for Profit, and of course, we got a hold on profitability for farmers, but there's so many new technologies out there and new cool things. Ask the questions, then let us dig deep.
Yeah, so we've got two guests today. We've got Chris Bauman and Trevor Froling. We're going to start off with Chris first. Chris, tell our listeners who you are and what your connection to today's topic is.
Sure. Chris Bauman, live here in Central Illinois, and I am the co-founder and CEO of Common Ground, formerly cashrent.com, and really excited for the opportunity to visit with you all today. And kind of what all kicked this off was, we started out as cashrent.com, and basically our vision and goal was to help landowners connect with quality tenant farmers. And so we set out on that mission and started gaining a lot of users from the landowner perspective and also the farming community. And, was on that journey for a little while. And we kind of view ourselves as top of funnel and making these connections. And Trevor and I met probably 2 years ago, maybe a year and a half. He was actually bidding on a farm, and we wound up talking, and I found out he was selling crop insurance and in the industry. So we had a long conversation about that. And I said, hey, I'd love to learn more about your business, what you do, and if it can provide value to any of our farmers that are members of cashrent.com. I think it'd be a great fit where we could maybe start working together and drive some more value.
So when did cashrent.com become Common Ground?
January of this year, and kind of how that transformed. It was kind of a slow burn over time, but we started just facilitating cash rental auctions, and then we started getting into various land brokers using our product at the time of sale and new tenancy. They said, hey, could we use this for sale auctions? And it's like, okay, yeah, we can look at doing that. Providing the software solutions for that. Anyways, we don't actually conduct the auctions, but we do provide the software. Landowners were asking us, okay, if you're leasing out my tillable, obviously I live 4 states away, I don't hunt it, could I get some additional revenue through hunting leases? And it's like, yeah, we can do that as well. And over time, we just kind of evolved into facilitating more and more transactions through the software. So we thought it would be fitting to kind of rebrand, as soon as possible into Common Ground, because we're not just facilitating cash rental leases at this time anymore. So excited for the new brand and the expanded business model, and looking to continue to drive value for both landowners and farmers.
So Dave, we're going to ask questions about that side of the business towards the end of the episode. I want to focus on the general idea at the beginning, and then we'll get into that. So before we start talking about the insurance product, Trevor, why don't you introduce yourself to our listeners?
Yeah, so I'm Trevor Froling, and I proudly represent Hudson Crop, and that's a unit of Hudson Insurance Group that provides a broad range of crop insurance products to farmers in all 50 states. Our goal is to be the most trusted ag risk management partner by offering innovative technology to support the farmers' risk management needs and by delivering outstanding customer service and support. All coverages are underwritten by Hudson Insurance Company.
Hey, I love that. I used to sell crop insurance myself just a little bit and realized very quickly that if you don't stay up on it, you quickly lose out on what evolves. And who'd have thought crop insurance evolves as quickly as it does, Dave?
And doesn't crop insurance, it's the same for everybody who sells it?
That's correct. The base crop insurance, Trevor, correct me if I'm wrong, the base is the same offering everywhere, but there are proprietary products that can make the insurance companies differentiate themselves from others, right?
Yes, Tanner, that's absolutely right. So your multi-peril crop insurance that is government subsidized. Every single agent in the country has the exact same rates as the other insurance company and agents are offering it. Every individual insurance company, however, does have the ability to offer private products that are not government subsidized that gives an advantage if you can come up with some good ideas.
And that's what we're talking about today
Yep.
is a good idea. So, Chris, why don't you start into this and talk about what this new idea is?
And I presume you're alluding to the flex lease insurance.
Yes, sir.
Okay. And I will kick that back to Trevor at some point, but I'm not the insurance expert by any means, but through our conversations, I started to learn a little bit about the insurance industry as well. And he quickly brought me up to speed because, I obviously I'm not in crop insurance, but I wanted to provide value for, all of our member farmers on the site. And, I've always been of the mindset, drive value, drive value, drive value. And talking with Trevor, he said, well, I do crop insurance. And I was under the assumption and mindset that, oh, there's just federal crop insurance. So he quickly educated me on, Hudson and who they were and how they do business. And I learned that there was a portfolio of private product out there that I thought could be very valuable for all of our members to know about. And one of which is this flex lease insurance. We've got a certain percentage of our members that farm that carry flex leases. And so we met for breakfast and he kind of talked me through the product and gave me the 30,000 foot overview. And I said, wow, this is something that we should get out to the masses of our membership base and see if they have any interest, because it's just another layer of protection as all these various lease types get signed of, okay, how do I protect in a flex lease case when prices go through the roof or whatever the case may be. So Trevor can speak to the mechanics of it and educate you on the specifics, but that's kind of how all this got started, of me really getting educated and learning, man, there's some products out there that people might not know exist, and we want to be that conduit to get this type of product out there.
So, Tanner, for our listeners, just in case, we all know at this table what a flex lease is, but just in case our listeners don't, I'm assuming most of them in agriculture do. Of course, there used to be crop share. Then now there is cash rent, which I'm going to say most people do. Some people pay 2 times a year. Some people pay 1 time a year. And then there are multi-year leases. But flex lease is where we're going to carry a basis. Okay, a bottom dollar that meets the minimums, but we want to share in the reward and share in the pain. It helps both sides. Helps both sides, and it's some tax accountants would even call it material participation, because you're helping with the decision-making process, possibly if they're marketing the grain or taking risk.
Right. So, Trevor, as you are aware, what's the most common form of a flex lease?
In the last 2 months, I've been calling farmers just about nonstop every day, talking to them about flex lease insurance. And what I've found is there isn't one farmer that has the same flex lease as their neighbor. Every single person has a very individual set of terms in their flex lease. And what's very nice about this flex lease insurance is it can take any flex lease, any farmer, landowner setup, and it can still provide that insurance. It's all based on county revenue, which is a spring price and a county yield. And essentially, what the flex lease insurance does is it takes those two numbers and protects on an increase to the farmer's revenue that he would be paying the landowner through a flex lease agreement.
So, what about underwriting? When I think insurance, I think underwriting, and I'm like, okay, you just said there isn't one lease that's the same.
Yeah.
So, every underwriter's nightmare is having 9, 10 different leases. And what if they don't? What if those leases don't mirror what the county revenue is?
Yeah, so to be eligible for this policy, all someone has to have is a physical flex lease agreement between a farmer and a landowner. And essentially, the way the insurance works is, so in the spring, you guys are aware of area revenue protection, which is essentially a county product that protects a farmer on their crop insurance. So the flex lease agreement is set up the exact same way, except on the high end of revenue. So your typical ARP policy, area revenue protection, is a 90% coverage level. It takes 90% of the expected county yield times your spring price, and that's what a farmer's guarantee is on their crop insurance. Essentially, what the flex lease insurance does is it has a 10% deductible on the other side, 10% higher. So if in the fall we go in and we have a great year like we did in central Illinois last year, where you have 20, 30 bushel higher yields than the county average and a great fall price, and we had a $6.86 fall price last year, it covers that farmer that may have marketed his grain too early in the summertime. Because essentially what happened to a lot of my insureds last year was they went through the year, sold their grain, and because they're flex release agreements, some of them being taking that fall price into account and splitting 50% of that revenue, they had a huge check to pay in the fall on additional cash rent. And I'm not shy to say that some of the guys I talked to were paying essentially double what their cash rent was going into the year. So essentially what this product does is it ensures that gap between your base insurance and the increase in rent because of higher yields and high price, and pays for the landlord's cost.
Yeah, I heard a couple examples of farmers paying $700 plus an acre
Oh yeah.
because their flex portion of that lease skyrocketed. And like you said, if it's a perfect storm of you had great yields and prices went up, that could be a pretty hefty check to write. But now, clarify for the listeners, Trevor, you said this is protecting the gap between the high end of your insurance
Yes.
and what happens if your flex bonus goes up. Does this mean I have to have my insurance bought through you as well?
So Tanner, I always find real world examples are the best way to explain something you've never heard before. So
Yeah.
my example would be, my own individual Iroquois County corn. So our county yield expected last year was 186 bushels. My spring price in 2022 was $5.90. So you take 186 bushels times our spring price, and we get a price of expected revenue of $1,097. So just like ARP, except on the high end, we have a 10% deductible, right, through this flex lease insurance. So 10% higher than that 1,097, there is no payment, there is no indemnity. That's your deductible. So 10% higher than 1,097 is $1,207. So the actual revenue in the fall, anything over that $1,207 is covered by this flex lease insurance, capped at 20%. So now we get into the real numbers, right? So last fall, I went out and had the best corn I've ever had in my life. And on top of that, we've had the best price I've essentially ever had as a grower. So we had $6.86 corn, and then we had a 212 county average for corn. So the actual revenue in the fall was $1,457. So the gap between the deductible and the actual revenue was $250. The insurance covered $241 per acre that the farmer received in income, which part of that would have been paid to the landowner in additional rent on a flex lease policy. And essentially what the farmer did was he was able to pocket all of his income for a premium cost.
We're sitting here stunned because that just seems so simple math-wise,
right,
to draw out in a year where fall prices or fall yields end up higher than expected.
So I'm just trying to already circumvent the system. Can we make it so that all of our flex is paid to the landlord? So instead of sharing it 50-50,
yeah,
can you put less risk on yourself as a farmer? So I'm going to get a higher basis maybe, but then pay out a higher, you get 100%, Mr. Landlord, of this, and all I'm doing is above, and then I'm playing the markets, and if we go above that 1,200 number, well, then I'm covered. So then
for 20%.
you're correct, but I still got my number above. But maybe you skew your
You write the lease
you
to
write-
match the insurance.
correct, and skew your dividend to cover your basis.
Well,
Did you follow any of that? We kind of talked amongst ourselves.
absolutely. So what we like so much about this product, guys, is the landowner wants it just as bad as the farmer does. So through Common Ground, there's you know a lot of these auctions, and you have a landowner that's essentially renting to a farmer maybe they've never met before, and they go to the farm and they're aware of these flex lease policies, and they think to themselves, well, I'd like an opportunity to make more money in the fall. If yields are high and prices are high, I'd like a piece of that too. And a lot of times what we're seeing is the farmer and landowner splitting this premium, knowing that the farmer, there's an opportunity for higher prices in the fall, but if there's a price in June where I can make money and market my grain, I'd love to be able to do that, knowing that I have the flex lease insurance to back me up if the prices do take off. If there is a yield issue or if there is a price issue, I have my base crop insurance, my government subsidized crop insurance on the downside, and then I'm buying my flex lease insurance on the top side to protect my new landowner that's essentially putting a lot of faith in a farmer, paying premium numbers to rent ground, and both sides knowing that, well, I'm protected on both sides of the coin, whether yields and prices are lower or yields and prices are higher. I can guarantee that payment.
So, Chris, as you sit here as owner of Common Ground,
Mm-hmm.
what's the advantage to you to participating in this partnership with Hudson?
The true benefit to Common Ground is the value that it provides to all our members. I mean, when when rents are getting so high and prices are hot and we're seeing rents, we're even getting questions from the landowner when we start seeing $500-600 rent. We just had a lease in Illinois here on okay ground, 120 pi. It hit $640.
Oh.
And the big question from the landowner was, well, how do I make sure that I'm going to get paid? They're paying top buck, and they're taking the risk. And I talked to the farmer about that, and I said, hey, you're at 640, and he goes, honestly, he goes, I've got a couple flex leases that I've paid out more than 640 an acre on. So for us, it's always about, as a business, how do we drive value? And there's three people in the equation. Common Ground is the software, but we have two customers, a landowner and a tenant farmer. So for us, it's how do we continue to drive value for our customers? And that's why I saw a perfect fit with working with Trevor and the Hudson agency to say, hey, we can continue to drive value and add value to our users. And through this product, it's been nothing but positive, just getting the word out that something like this exists. So, like, to Trevor's point, landowners are coming to us saying, oh my gosh, there's a product out there that can protect and make sure I get paid. Absolutely. We don't do any of it. We're not an insurance company, but partnering with Trevor and Hudson with their unique capabilities to provide these products, it's just advantageous for everybody in the process to know that these exist.
So, Dave, do you want to ask your question, or do you want me to ask your question?
Go for it.
So, Trevor, as we look at this, we're only collecting on a premium when we've had a good year,
Correct.
yields and or prices.
Correct.
You kind of hinted on it a little bit as to why we'd want this coverage, because you would think if we had a great year yield wise and a great year price wise, why don't we just pay it because we made a whole bunch more money?
Right. No, I
So
totally,
why?
I totally
What's
see
the
what you're
benefit?
saying. So this is the Farm4Profit podcast, right? So we're looking at
Yeah.
the best ways that we can go into a year and guarantee that profit. I mean, when I go to market my corn or my soybeans, the first thing I look at is at my bottom line is if I'm making a sale and I'm making a profit, I'll never go broke. And that's what I'm getting from a lot of these larger farmers is if I can buy a product that essentially guarantees me a profit this year, why would I not buy it? It's something that allows a farmer to market their grain, and make money, throughout the year. And it's just another tool that they can use in their marketing.
Doesn't make them a profit though. And here's where I'm going with this.
Sure.
You only paid if it was a good year. So if we use your initial example and you were basing off a $5 corn, it went to 6 something.
Yeah.
If you only had $5 corn and you only got your normal bushel, then the policy wouldn't pay, correct?
Yeah. So if the prices went lower and the yield went lower, it would expire worthless. But I could
But
see
you
the
also
same thing.
probably still you also probably still wouldn't have to pay a bonus on your flex lease.
But you had to pay for the insurance.
You would
Yeah.
have to pay the premium.
So we still have more money out when we're making less money in.
Right.
Potentially, yes. Same thing with the health insurance premium. If you don't use it,
Correct. But if we make more money and we win, okay, let's say that the prices are good, maybe I'm missing it. What's the advantage? Because we still made more money and we paid our lease, I guess, because now it's more money on top of more money.
and Trevor stated in his original comment, two things is that you still have your regular crop insurance to protect you on the downside.
Yes, you do.
Right.
So this is an added cost. You'd have to weigh it within your operation to make sure it fit or didn't fit. If you think that the risk for you having to pay out a bonus on your flex lease is greater than the risk of you forking out a premium and not getting a return on that, that's where your ultimate calculation would be, right, Trevor?
Yeah, absolutely. I mean, you could make the argument on multi-peril crop insurance too. I mean, in Central Illinois, we've had 3 straight years of incredible crops, great prices, and I haven't paid one claim on a county policy in 3 years in Central Illinois. So when you go into it and you it's a calculated cost. You when you buy insurance, you look at your bottom line, and for example, last year in Iroquois County, this policy paid $241. If the premium was $20, it paid for 7 years of the premium cost. So it's, like you said, it's another added cost. But if it's something where you can see the value in it and you say to yourself, I'm not going to pay double rent again if the prices do go higher, and I want to be able to sell my grain right now, I can get $6 corn this summer, or I can get $13 beans and I can make money. But the price in the fall goes to $15 or $7 on corn. You're not paying that additional rent to your landowner because you have this flex lease insurance to protect you.
And this is available on any crop, correct?
Yeah, corn and soybeans.
Okay.
So now we're playing on county averages.
Yeah.
So what if my county really sucks? So your county in Illinois might be fantastic, okay? But let's go,
Careful.
southeastern Iowa would be
Careful.
less yields based on the productivity index.
Yep.
They might not be as good, and maybe we have just other crappier operators in the county that aren't truthful with the FSA office or something. So if our county basis is lower, does that change things, or is it like ride the wave?
Yeah, I'd be the first person to say that, every individual person's situation is different, right? So if I go talk to somebody and they're routinely around the county average for their crops, maybe this isn't a product that fits you. This is for the producer that routinely outperforms the county average, a high management farmer that they're on top of all their costs. I mean, I come from a loan officer background at a local bank, ag lending, and I can't tell you how many guys I talk to that don't know what their break even is. But if you are a person that's, you're in the day-to-day cost of your crop and you want to guarantee that, if prices do go higher and I sell my crop now, that I'm not going to be making this higher rent payment and losing money, this is a product you should look at. But I'd be the first one to say that, if you're a person that does not follow all those numbers and look at your break even and do a balance sheet and look at these different things, buying more insurance may not be the best fit for you, because you have to, in any insurance you buy, you have to be using the advantages it gives you to market your grain. So that'd be my answer to that.
if I got it right, its final revenue
Yes,
is equal to the final county yield times the harvest price.
correct.
Correct.
Got it.
That would be the number that would be basically calculating your indemnity. And you take that.
So what date is used?
Oh, I'm sorry. Go ahead.
But what date is used?
Date or data?
Date.
Yeah.
Oh,
When do you establish your fall figure? Is it?
yeah.
Yep.
So it would be on your crop insurance every year. It's the same fall price that you calculate for your RP indemnities, and the spring price is the exact same that you'd get for your guarantee when you sign up for your insurance. Same dates. And this product
Sure.
you have to be signed up by April 1st to buy it. So for this next year, you could in the fall you could look at it and if that early if you wanted to, but that's the deadline for purchasing it, and then it'd be your fall insurance, just like your RP or your county products would be.
So as we kind of wrap up the conversation about this,
Sure.
we know that this is a new product. And this is obviously something that each individual listener is going to have to think about for themselves because it's not tied to your flex lease.
No.
Correct? If my base is $200 an acre and I have to give up 50% or I have to give an extra 5 cents a bushel every penny that it goes above 450 or whatever my terms are of my lease, then it doesn't change the premium in my county. My premium for this product would be the same for my neighbor in the same county, correct?
Exactly right. It's essentially set up that way so it can be offered to every person that has a flex lease. Because as we mentioned earlier, everyone's flex lease is set up differently. So trying to have an insurance product that could cover all of those was quite a task to begin with. But what we kind of found is a middle ground so everyone can have access to it.
Now, is it really the middle ground or is it common ground?
I like it. I like it a lot, David.
So Trevor, though, something just popped to my mind is, do I have to have a flex lease?
Yes.
I was going there, but I hadn't got there yet.
Yes. So for this,
That was my other thing.
that is the one.
Why?
For this product is you have to have a valid flex lease agreement between you and your landlord to qualify for this.
Why? Because you are going off county.
Yes, but so this would only apply to your flex lease acres as well. So if you farm 1,000 acres of corn, but only 200 acres of them are flex lease, this would only apply, and your premium would only apply to those 200 acres.
See, my argument was going a different way, to not to shoot holes in anything, but I can hear
That's kind of our job.
I can hear the commenters that are listening right now saying, well, why did I even do a cash rent auction to make my lease get so high? How about I just negotiate privately with my landlord, give them a little bit more, but not to the point to where I need a flex lease where they're trying to incentivize it themselves as the landlord to get more money. Maybe you can protect yourself with less risk there. But what here then leads me into my second thought. Tanner, this is for you and Trevor. If we have a product that will protect us on a flex lease, okay, flex lease could potentially make both sides more money, the landlord and the land tenant. Are we going to see cash rent go up? We have less risk. Can we give more? Can we give more money?
So I'll jump in first, Trevor.
Sure.
So define, will cash rent go up? Will the amount of dollars exchanged from a grower to a landlord increase? Probably yes. But I don't see this changing a lot of the base level rent because you're still going to have to identify a break even, a physical amount that is acceptable to your farm to exchange hands if you have an average year.
But okay, if we're taking the risk, okay, because we know the risk is covered, could we go past the break even? So I'm the farmer making the decision. I'm thinking, man, I really like this ground, but I want to outbid that other guy over there. I'll raise my base instead of $150 as my base, or instead of $200 as my base. That's where my break even was. 5 out of 6 years, I'm good because I'm covered by this and I'll make extra money. Tell you what, I'm going to give 220 cash rent. And now we up our base because we have protection on this end. Trevor, what's your thoughts?
I completely agree with you. And what I've learned from talking with the guys that are on Chris's Common Ground site is these are the go getters. These are the guys that are looking to grow, that are wanting to bring more money into farming. And what they're doing is using tools like this. So not only they can make more money, but the landowners are making more money too. It's a win-win for both sides because it's just like you said, they're using it as a tool to get more ground and be able to offer more money to the landowners that they want to benefit just as much as the farmers do. And I've seen that the last 2 months and working with this product is guys are buying it and using it as a negotiating tool, and it's been working for these guys. They've been using it to go
I
out
it,
and rent ground.
it's just more security for anybody in my mind that if they're gonna put themselves out there anyway and take a risk on higher cash rent to grow their operation. Now, if we just had some protection to kind of assist it.
Yeah, my thought from the banker side, and then Chris, we've got some questions for you around the cash rent auction and Common Grounds platform. Is I would like to see my customers, the people that I work with, maybe not be so quick to increase the base, but be more aggressive on the terms of the bonus
Mhm.
because of the protection that is in here. But that's just my 2 cents. So, quick to kind of recap this portion of the conversation. We all know that there's advantages to flex leases. It's a difference between a straight cash rent bid and a bid that has a base with an adjuster that usually shares in the great years, but also shares some of the level of the risk in a disappointing revenue year. Landowners have the opportunity to benefit financially if the grower has high yields and high marketing opportunities. And we know that the disadvantage to the farmer on a flex lease is just that. They may have to pay an extra high rent level in years where there's additional yield and additional revenue. But that's where this flex lease insurance through Hudson comes in, is it helps protect up to 20% of the high end based on the county average yield and the fall harvest price compared to your spring price. It does come with a 10% deductible. So you hit your 90% crop insurance guarantee, you add the 10% deductible plus 20% coverage, and it gets you up to that figure. The example he gave us is it took him from crop insurance guarantee level of around $1,100 that maxed out close to $1,450 just for round numbers.
Right.
And within there, you only had to give up about $100 in that gap as part of your deductible. So Hudson's able to do this. I do have one question left for Trevor before we pepper Chris with some questions here.
Sure.
And is Hudson the only place to buy this?
That's a great question. Hudson Insurance Group, as far as I know, is the only company that offers this product. And this is a newer product, and it's only the second year that it's been available to farmers. And that's a big reason why we've been so successful is guys aren't aware this exists. And I think I really do appreciate you guys inviting us on because I think it is a valuable tool for your listeners. And I think it's going to continue to be something the guys look at because it's like we mentioned earlier, it's a marketing tool that guys can use to go out and rent farm ground.
So, Trevor, if our listeners stop listening right now, first off, he gave a summary of kind of what on the insurance side of the world.
Yeah.
If they want to know more, how do they know more about it? Is it commonground.com or trevoroawesomeness.com?
Yeah. Visit Common Ground website, find one of us to get a hold of, and we can definitely get it set up. My email is trevor@commonground.io. If anyone wants to reach out to me and just has questions, please do. I'd love to have a extended conversation with anybody that's interested in it.
Good. Well, don't leave, Trevor. We're still going to pick your brain too. But Chris, our listeners have a love-hate relationship with cash rent auctions.
Sure.
And your platform is obviously able to help facilitate that. And it wouldn't do us justice or do our listeners justice if we had you on a meeting and we didn't ask questions that have come in our email.
Yeah.
So the premise is great. one, you're providing landowners an opportunity to maximize their revenue
Yeah.
for an asset in which they own.
Mhm.
Two, you are providing farmers an equal opportunity to bid on and expand their operation. That's the general concept, correct?
Correct.
Where our listeners get frustrated is a landlord that they might have had for years finds your platform and lists their farm, and now they've lost ground because they don't or can't compete in that cash rent auction, right, Dave?
Mm-hmm.
When you say
Whether
they
that's
can't
fair, I'm using
compete,
air.
what is keeping them from competing?
Yep, that's where I was using my air quotes. The fair, that's where I was going with the question, is due to their operations management, whether it's a personal limitation or a financial limitation,
Mhm.
they can compete, maybe not win, is the terminology.
Well, and I think what's important to understand, and some may or may not be aware of this, but high bid doesn't win on our site. The landowner is free to choose whoever they want to choose. So on average, we bring 12 bidders on average to each piece of property, and it averages around 62 bids between those 12 people. Well, when that auction concludes, the landowner now sees, okay, it's over, everybody's done bidding, and here's a list of all my tenant farmers. So in a lot of instances, we have landowners that go and say, hey, I really think we should be seeing a bump in cash rent. And the farmer says, no, inputs are up, whatever the case may be. They say, hey, I can't pay you anymore. Well, the landowner puts it on, and that current tenant farmer winds up bidding on it. Well, maybe he was $10 below the high, but he came up $50. And if they've had a relationship for 15 years, that landowner says, okay, I'll stay with you now that you came up. So we leave it completely up to the landowner. And trust me, when I came up with this idea, it was, oh my gosh, what are farmers going to think of this?
Right.
And before I started it, I actually spoke with a lot of farmers. I'm from Morton, Illinois, small farming community here in central Illinois. And the overwhelming response was, this will be a great tool for farmers looking to grow their operations, because we don't have access to ground. If it changes hands, I haven't heard about it. And it really ticks me off if I know somebody picked up a lease that I never heard about. And, I went into this and said, hey, open, fair, transparent, competitive marketplace. Because we've seen the dynamics of farming shift in the last 20 years so dramatically. Every farmer wanted to welcome the ag tech revolution into their cab with precision planting and combines that are picking up 20% more yield and GMO seeds that are producing more bushels per acre. But how is that translated back into the actual asset holder, the landowner? Are they keeping up with those cash rental rates and the increases in yield and the increase in prices? And conversely, if you have a down year where we're going through lower grain prices or lower yields and you were paying a higher cash rent, you can go on and do a cash rent estimate and say, hey, I know I was paying you $375, but I just ran a cash rent estimate and it's more around $320 now because commodity prices are lower or yields have been lower. Whatever the case may be, we're just a software in the marketplace. And I get hit with that question all the time. Well, you're driving up prices. I don't set the price. It's the farming community that sets the price. And every farming operation runs differently. Some have different overhead structures. Some guys are buying inputs at 10,000 acre scale. Some guys are buying inputs at 1,000 acre scale. It's one of those things that you can't avoid it. There's going to be consolidation. It's inevitable. And it's not going away. But that's why we set it up where high bid doesn't win. I bet you 90% of the time high bid doesn't win in our software.
So
Where
if
the
that,
landowner says, hey, I want to give this 35-year-old a shot and I want him farming it for the next 30 years.
if that's the case, it must be running a sealed bid auction.
In what regard?
Like, give me your highest and best bid you're willing, and then we present all the bids to the would-be landlord, correct?
Yeah, it's all anonymous. You just anybody bidding just sees bidder number 1042 bid this. Click here if you'd like to bid again.
So
Except for the landlord. The landlord gets the information to state whose bid came from which person.
Mm-hmm. And every farmer that registers fills out a farmer profile.
Right.
with all their information, what equipment they're using, their age, any accreditations, any particular farming practices that they practice.
Right. Because
And then at the end, the landowner says, "Hey, I want to talk to these four guys."
Mhm.
yeah, because that would be the instance in comparing it to a farmland sale, because I would be irate if I stood in there at a public land auction and I was the highest bidder at the end when you said sold,
Mhm.
and then the land seller was able to go through the last four bidders and say, "No, I don't like Tanner. I'm not selling to the highest bidder. I'm going to sell to the second highest bidder because he's been my neighbor forever."
Correct. And one of the
Where a sealed bid would provide you that opportunity.
and I've done both types of auctions before, and one of the reasons some of my farmers have actually liked, that's why I asked the question, was it sealed bid, they've liked public outcry auction, is because they know who they're bidding against. I often
Mhm.
wonder, it's would they even give more at a public outcry auction where they know, okay, Jim was willing to give that much, tell you what, I'll outbid Jim, I'm going to bid here, and go. Then they get to see the smoke behind the wall, I guess, if you
Right.
will.
Yeah.
They get to see the other guy and bid uh, on that, on that. And if they're out, they're out. I just can't afford it anymore. Or likewise, man, I really do not want that guy getting in my back door. I'm going to have to up my bid. And then they
Yeah.
up their bid just due to the competition. Of course, auctions work because of competitive bidding and transparency aspect, which you have. We've seen some crazy high rent auctions this year
Mhm.
in when times are good, people bid more, and I've seen farms go from $200 cash rent to $600 cash rent.
Mhm.
There was quite a spread, and what Chris was saying is sometimes the landlords have not kept up with um, where the market is. If they don't have a farm manager, if they're not using a software, and so they'll go to, you called it a rent-estimate, is that what you
Cash
called it?
rent estimate. Yeah.
So we talked two things, and I wrote rent-estimate versus what is somebody willing to give. So when I think of an auction, I think of what is the highest unchallenged bidder, the highest price that somebody's willing to give. And or if you do it a sealed bid way, give me your highest and best offer, period. That's
Yep.
just give me your highest and best. Versus a rent estimate is based on averages. So I get this question a lot selling farms and managing farms. They're like, well, what's the county average? Iowa State said this. Illinois said this. This is where our average should be. Well, that's great, but then these people are paying either incredibly lower than the average, or these people are paying higher than the average. So then it's like, well, what do you think somebody's willing to give? Well, then so we have two things. One is rent estimate, then
Right.
one is what are, based on averages and historical data versus that. I've stayed out of that game, and so have a few other managers. I've had opportunity to do it, but just because the perception, Chris, the you're the prick that just raised my cash rent. Which, yeah, we're not the ones raising the cash rent. It's the guy that bid against you over there.
And it's
But
the landlord's decision.
and it's the landlord's decision. I'm just the fiduciary in the middle that's establishing the highest price, whether it's software based or auctioneer based or whatever. But yet the perception is huge that's out there.
Yeah. Which I'm fine with. I mean, I knew there was going to be all sorts of perceptions going into this, and it's absolutely something that, that's the cross I'm willing to bear. And
Yep.
I tell my wife all the time, heavy is the crown, and if you're making somebody upset, you must be doing something right. So
So,
we've got tons of landlords and farmers that absolutely love what we're doing. Are there a few tenant farmers that have lost a piece of ground that aren't happy? Absolutely, but this is not a zero sum game. This is this is capitalism at its finest, and you know
right. So, as our listeners, if they are on the side that maybe are not in favor of such a platform and a program and the evolution of where this is going, if they need to learn how to up their game, be competitive, or get into an area that provides them the best opportunity to win, what are you seeing your top tenants doing that's setting themselves apart from others and allowing them to be selected by more landlords?
I get that question a lot. I mean, quite honestly, it's across the board. Um, I don't think there's one silver bullet here that's just the secret sauce, but there's a lot of things at play when a tenant is bidding, and there's a lot of things at play when a landowner is making a decision. And I think it's uniquely different each time. But going back to what I want to do is I want to help our community, which it's the Common Ground community. We're helping landowners, we're helping farmers. It's getting partnerships with a Trevor out there who can provide a product that helps grow their operation or hedge their risk. That's how I'm driving value. And if you go to commonground.io and you sign up as a farmer or a landowner, it's completely free. But you're going to start to get notified. You're going to get emails about, hey, check out this new product that might help up your game. Like, we want to be on the cutting edge of driving value for both landowners and farmers. If we lose that value proposition, we will no longer be in business.
Right.
I got like 3 questions, Tanner.
Fire away.
All right. This one's for you.
Good.
What if cash rents were public? So just like taxes, I know what you pay taxes on your house.
What if tenants were public?
Yeah. Just curious. Thought for our listeners. Think about that.
So I know just my initial reaction to that. There are customer meetings that I have had
Mm-hmm.
that do wish there was a public registry, like a county assessor's page, that listed who the tenants were on farms. And unfortunately, that's to drive more fierce competition. And I say the word unfortunately just because of we see the way vertically integrated commodities have gone. And that would definitely lead to a potential of a lot more consolidation. Because if cash rent amount and tenant is public knowledge on every piece of farm ground, inevitably that provides an opportunity for those that have the desire and the ability to pay higher cash rent and potentially farm at lower margins, the opportunity to call on said landlord and make a pitch, which some would argue that ends long-term family farming relationships with multi-generational landlords. This platform, Common Ground, is not to poach landlords away from tenants. It's to provide a landlord an opportunity to boost their revenue. And if the landlord is content at the revenue level in which they're getting and supporting the farming family that's currently doing it, that is the landlord's choice. To take a bid on Common Ground is the landlord's choice, as we've learned today, not necessarily that of what making everything public would be. That being said, there's a lot of my listeners, or a lot of my customers, and a lot of these listeners that would like to know who tenants are on every farm around them.
So that data isn't public, but you can buy it. So you can I buy it, and if I buy it, I guarantee you John Deere and everybody else buys it. So you can get who farms it, not how much they pay. So you can get who farms it and where it's at. All right, moving on. Next question. Tillable.com. Cash rent platform, one of your competitors in a digital space, doing a very similar product where they're having cash rent auctions, possibly getting into selling ground, not necessarily with a built-in auction platform, but with a sealed bid platform nonetheless. How do you differ from Tillable?
Well, I'm sure everybody knows the history of Tillable and the letters that were sent out and kind of their model to get out of the gate. And we're a marketplace, not a middleman. And I don't know exactly how Tillable has shifted their business model. And I preach this to everybody all the time. Let's not focus on what our competitors are doing. Let's focus on what we do. And I know I honestly don't know how many tillable leases they're doing anymore. I do know that they've got into farm management. I know they've got into farm brokerage. I know they've got into some B2B software side of things, but we're a marketplace here to drive value for landowners and farmers. And that's as simple as it gets. How they go to market, how they do business, if they say, hey, we'll give you X for the farm for the year, and then they rent it out for more and they're making money on the spread, that's their business model. I don't know whether they do that across the board on one farm or 100 farm. I don't know, but we're simply a marketplace to bring people together. And through the hunting lease side of things, We're starting to aggregate listings where people can come and view listings for sale, similar to a land.com. So we're just building an ecosystem in a marketplace that's kind of creating a cohesive network where everybody can find solutions for what they need. And
Fair
and
enough.
and to Tanner's point, he said something. It's when it's up to the landlord. We have people that run a cash rent estimate all the time, and all we can do is provide it's an algorithm and an equation that basically takes a myriad set of data points that says this field with this soil, with this weather, with this expected yield average, with all these different variables. And it's dynamic, it's tied to commodity prices. And we can say, okay, here's what the best guess is. And we give a range. We give a high, a mid, and a low. Well, we don't know whether that field is, pattern tile. We don't.
Yeah.
That could fetch a higher price. So we're very conservative in our estimates, and I would say 99% of the time our results are 15, 20, 25% higher than the high range because the local farmer knows exactly what's going on with that piece of ground where we might just be in the ballpark. And we run cash rent estimates for landowners all the time that say, okay, I could be getting 400, I'm getting 360. Yeah, it's another 8-10 grand a year worth busting up a 15-year relationship for. Nah, I could be getting more, but I'm happy with my farmer. Awesome. Great. Run one next year. Maybe you should be getting 500. Then it's maybe time to have the discussion. So it's as much to educate and inform. And I would bet you, I don't know the percentage, and I'm actually going to go back and look at this, but I would say there is a large percentage of cash rent estimates that get run on our site
Mhm.
are by farmers.
Well, that was my next question. Is it worth having an auction every year? Right there. And the reason I say that is we just met with Tractor Zoom. We're talking equipment values. Some stuff's up, some stuff's down. Well, if everything's down, is it more transparent to everybody? So a lot of times I'll sell a farm for 6 siblings, and one sibling always think it's worth $30,000 an acre. The other sibling's like $8,000. So we have a huge spread of where it's at. So for transparency, just have an auction open and public. Well, what about transparency between the common ground of the landowner and the tenant? Let's just have an auction every year. Maybe it goes down. Maybe nobody else bids on it next year, and then it plays in the favor of the farmer. Has it ever played in the favor of the farmer where it went down?
No.
So it's always got.
But you're talking about an asset class that is 30% undervalued. Like it shouldn't go down. I mean, what is the price of land done? It's only increased, so their yields have increased. It's so antiquated that it's only going to continue to rise until it doesn't. Like we're riding a wave of an undervalued, asset class that has been severely suppressed. And I always we talk about this thing called forced appreciation. So sometimes these farmers are shooting themselves in the foot paying lower rents
Oh yeah.
because rents correlate to land values. So when you've got an area with suppressed rental rates, you've got an area that has suppressed land values. Because if I'm an investor, and we work with investors all the time to say, okay, here's a $500,000 piece of farm ground. It's getting 200 an acre. Your cash rent estimate says it should be getting 350. I'm going to buy it at 500,000 at the 200 an acre. And then I'm going to put it on your site. And then I'm going to get the rent up to 350 where it should be and should have been. Now that same $500,000 piece of property that's renting out for 350, what's it worth on a 2 to 3% annual return? So all of a sudden, when that farm ground sells at 700 now instead of 500, the farmer next door that owns the ground's just got a 700,000 comp instead of a 500,000 comp. So it's forced appreciation among a $3 trillion asset class that a rising tide lifts all boats. So you might be taking it on the cash rental side and viewing it as, oh, you're driving up prices. Well, hell yeah, we are. You guys are. It's worth that much. Somebody's willing to pay it, but the ground is worth that much more. Your balance sheet is stronger.
Yeah, it just makes you wonder too if, I have a client today that's got a commercial building and has 3 tenants in a commercial building, and I informed them as I met them that their rents are below market. And they had
Correct.
no idea their rent was below market.
Mm-hmm.
It's just the tenants that they'd had in there and they were able to get. They had no issues with it. We're happy with the return until someone told them that they could get more.
Mm-hmm.
Absolutely. And I've got a real estate background. I've been a licensed realtor since 2009. And when I got into this, it was through personal experience. I was lucky enough to buy my first farm and go through gathering fragmented data and, come to find out, wow, the United States government doesn't operate that officially when publishing county rents. They're sending out cards in a survey, and it's stale data that's a year old, and it's not
Mhm.
keeping up with the times. And I sat there and just thought, I own rental houses. I'm a landlord. I've got duplexes. I don't let the tenants tell me what they're going to pay in rent. Why is that? Because I know what the market will bear. I've got price transparency. And I was sitting here with a farm saying, why is my tenant telling me what he's going to pay me? I need to educate myself and figure out what I'm going to charge him because it's my asset. I took the risk. I'm carrying the load on it. So it just struck me as odd that in the agricultural leasing space, it's the only space I know of where the tenant dictates the price to the property owner.
That's true. I don't let my customers tell me what interest rate they're going to pay.
Correct.
All right. So I have 3 normal sayings I say on the podcast.
Mhm.
Can you think of what direction I'm going next?
So I would combine 2 of them. That money is made in the margins, but data is the currency
Of the internet.
of the internet.
And the future. So if data is the currency of the internet in the future, you're gathering data on all the cash rents. Before you said your product's free. Anytime I see a product that's free, it means that I am the product. So I am the product. So I get to use your product for free, but you're
As a
collecting all
landowner.
the data. So who owns the data? So does Common Ground own the data on what I
We own,
bid on every auction?
we own all the data.
Yeah.
So, and part of our cash rent estimate is, we backfeed in using linear regression. So when we see, okay, we had a cash rent estimate in this county that was, 350. Well, if we do an auction in that county, that information gets fed back into the cash rent estimate, and it's constantly learning to say, no, ground in this area is actually renting for this.
Mhm.
So, data is key for both the landowner and the farmer.
He's
The
not
more
wrong.
data everybody knows, the better off they are. But we own the data. And I mean, quite frankly, we're going to reach a point in time where we have better, more accurate cash rental data than the USDA.
That won't be hard. I mean, that's good because there's going to be a lot of technology that's going to provide us a lot of updated data compared to what the USDA provides us as far as
Mhm.
any crop reporting that they give. And there is a lot of value to having a lot more accuracy.
Mhm.
Well,
Absolutely.
Dave, do you have any more questions, or do we sum up and do the wrap up question?
I think we got it.
Wow, good. I don't know if you guys anticipated this type of a show, but we appreciate everything that you brought to us. Trevor Froling, representing Hudson Crop, but his email address is at compound.io. So remind our listeners how to get a hold of you, Trevor.
Yeah, if you want to get a hold of me and discuss this Flex Lease insurance product, my email is Trevor at commonground.io, and just reach out to me, and I'd love to extend the conversation and talk to anybody that wants to reach out.
And Chris, how do people get a hold of you if they've got questions?
Chris at commonground.io or Chris at cashrent.com. They'll both work. And I would like to tell everybody it's free to be a member for the landowner and the farmer. You can watch auctions as a farmer. Just click, hey, I want to watch this auction. You'll see what's going on in the marketplace. But with that being said, as a member, you're going to get continual updates on information. And I know that, what products we have coming down the pike. This flex lease is just the tip of the iceberg. And I can tell you one thing, all our members are going to want to be notified as we continue to grow, expand, and provide more products with our sister companies and partners that we deal with across the board. And it's going to be good for everybody to be on the cutting edge of this technology. It is not going away.
Good. Well, I kind of already did a summary
Are you ready for another question?
on the topic, but you're welcome to ask any questions you want.
What is .io? We know what .com is. That's commercial. We want to know what .gov is. That's government.
Well,
.edu is education.
.ag.
.ag is for silver, actually. It's not agriculture.
I know, but we knew that.
Yeah. What is .io?
I don't know, but it's a lot less expensive than .com.
Now I got to look it up.
There you go. Farm for Profit. If you're going to create a farm website, it's yourfarm.io.
.io. Ding dong.
Nailed it.
Perfect.
Guys, this has been a pleasure. We appreciate you taking
likewise.
the time that you did. Hopefully we can connect again too. We encourage you, if you do have more releases coming from Common Ground in the future, that we'd love to share those with our listeners also. Trevor, thanks for taking the phone call. Listeners, we thank you for sending over the marketing materials that they had put out so we could dive a little bit deeper here. And as always, if you've got more questions, it's farm4profitllc@gmail.com. But until next time, have a good one.
Have a good one.